Alright guys, welcome to RTP Trading, and today we're going to answer the question, or help you answer the question, of day trading versus swing trading. Now, there's going to be so many different factors, and I'll probably make up a few extra as I go along. I really do this kind of just improvised. It's a PowerPoint. I'm not good at editing, I'm sorry, but just listen to the messages pre-hand. That's what's important, right? So we'll go through a starting definition of day trading versus swing trading. So to me, any kind of day trade is kind of the higher time frame being an hour or less, swing trading daily or more. So typically it's kind of how long your trades last. Are you in there for an hour or two? That's kind of more day trading. Are you in there for a few hours? That's kind of intraday. And then swing trading is kind of a day plus, right? um, so that's kind of my definitions, but generally speaking, the concept applies for wherever you want to go. So don't take these too literally. It doesn't actually matter too much, but it's just for you to know what I'm referencing to. So, what is the first kind of main point about day trading and swing trading? Well, there's a big difference in your time and patience. So, with day trading, I'm not just going to read off the slides, but obviously it's more time consuming, it's less patience required, etc., etc. And I'll elaborate because these things are important to do with your psychology. Now, for starters, time consumption is either a preference or a necessity. Now, if you're someone working a full-time job, 9 to 5, etc., etc., you don't have the time to do 2 or 3 hours a day trading, then swing trading just automatically has to be suited to you, unless you find that sort of window to dedicate to, okay, this is where I'm going to day trade. So that's the obvious. It's to do with lifestyle. Now, the other is kind of to do with preference. Maybe you do like being on the charts for a few hours at a time, you do enjoy it, you like it, and it suits you. That's the other side of it. Now, the patience is a really important aspect of it, and a lot of these things you're going to learn are from also personal experience. I've been doing this for about 6 years now, and personally, I don't have that same level of patience as I used to have when I first started. I've failed at trading for so long that you get to a stage where you just don't want to do this. Like, you want that immediate gratification, or it's not even immediate. You've worked hard, you've back tested before, you've practiced, you've watched all the videos, you've done courses, all of that stuff. Your patience is lower. So what happens is this kind of, oh, I might have to only get 1 or 2 setups at best, in a week, and that's me, everything moving really slowly. It can be really demoralizing to you personally, where it's like, wow, well, when is this going to happen, right? So if you're struggling, it's just like, wow, this is annoying. So harder to fit around the job, we kind of mentioned that. And the last bit in relation to this little topic is less time in trades. Now, some of us naturally will want the outcome to be there. Some of us get emotionally attached to the money, right? Oh my god, I'm up £100, I'm down £100. Oh, this candle's doing this candle's doing that. It's not about that. Well, it's about that. All of these things get heightened when you're in a trade for a longer period of time. So, do you know your personality? Can you survive any sort of temptation to not touch the trade for a long period of time? Like you said earlier, it might be a few days that you're actually into this trade. So, can you survive that up and down swing, in the market before the price hits your target or your stops? And to me personally, day trading, this is where it suits me a lot more. I'm disciplined enough to not touch my trade. I'm quite big on having your set stop, set target, and that's it. Any management comes in when we're really close to my target, where if we're a pip away and we're struggling, I'm not, I won't manually take it unless it just kind of goes through it. Uh, but we're talking such small micromanagement. But to me, it's very important, or I value just knowing the outcome. There's almost the element of ego in where it's a game. I just want to be right or I want to be wrong, but I want to know officially, was I right or wrong in my prediction? And the less time you're in that trade, well, you get that feedback quicker. And obviously, the more time, you're kind of nervy, and you might be on a few trades losing streak, and you might be like, oh, for fuck's sake, you're just watching it go in the red, and it's in the red for hours and days and days and days. Where day trading, this pain, if you want to call it, could not be a pain for you, but for a lot of traders it is. Um, it only lasts a set amount of time or less time. So that's my main takes on time and patience variations from this. Now, the feedback in practice, I think, is so underlooked here because so many gurus and what, yeah, swing trading is just as profitable as day trading, but I would argue personally that it might be more profitable or not, but actually day traders are better traders, at least in the short term. Now, the reason I say this is because if I'm on the hourly and I end up personally looking at the 5 minute and the 1 minute charts, and I'm doing a 2 to 3 hour session, let's go 2 hours conservatively, right? That's about 120 candles I've witnessed live in front of my eyes. I'm taking in that information. 120 times X amount of pairs you might trade, 3 or 4 pairs, 5, 10 pairs, whatever it is, right? But that's a lot. Let's just go 5 pairs, 2 hour session. That's 600 candles I've watched print live in one day. Now compare that to swing trading, let's say trade the 4 hour, that's what, six a day. Yes, you can argue you can have a lot more pairs, right? But 6 a day, 5 times a week was like 30. So you kind of need 20 pairs to even get the equivalent in a week what I get in a day. So in terms of actually practice and experience, I do think day trading is much superior in that sense. Now again, ultimately it's about what suits you, and I'm really big on that, and I'm going to keep throwing that out there every now and then because that's what matters, and I'm really big believer in that. But I think there's so much to be learned from just experiencing the market, seeing it, and being in a few trades and noticing how you react emotionally and what thoughts go through your head. And all of a sudden, once you're in the trade, to me personally, it's kind of like, oh, is this a candle a good sign or a bad sign for my trade? You really kind of go into those stories. Again, for me, I just want to know the outcome for the trade. I just want to know if I'm right or wrong. That ego I've got attached to it, but it's there and I can't avoid it, no matter whether I'm going to act on it or not. So, I'm looking at the charts and I'm judging it, and now we might break a bit of structure and I might be like, oh, okay, maybe we'll react from here. And it kind of forces me to look at it even more, and not just being in the trading itself, but I'm actively looking for 2 hours at so many candles that are printed left, right, and center. Where swing trading, it's easy for you to disconnect. So I think a lot of that is, mental. Where actually, if I'm not invested in it fully, I don't have that same level of interest or excitement or commitment that I can with trading. As much as I believe in it, I want to do it, I want to be full time and all of this, I just mentally check out if it's almost out of sight, out of mind, because it's so slow. And the more practice, obviously, with that, you can compensate that by doing extra back testing and going to replay mode and doing it, but it doesn't have that necessary real feel. And as good as it is, there's so many benefits to that as well. It's not physically the same as what live price action is. You see wicks, you see big candles spike here and there, you see news and play out in real time. Oh, this big spike here because of that. So that real simulation of that environment, because at the end of the day, the chart's a chart, right? Whether it's a 4 hour chart or a 1 minute chart, unless you know the time frame, you don't know the difference. So I think that's quite big, very underrated. So I would almost recommend that as beginner traders to be day trading, not necessarily with real money, maybe fake accounts while they're still kind of figuring out their strategy and their method and stuff like that, but it puts it into practice a lot more. Now, on the flip side of this, the edge and fees kind of go hand in hand. Now, most I was going to say bookies, most firms out there, brokers, most brokers, let's say for euro, dollar, pound, dollar, maybe you get decent spreads where 0.5 pips, less than a pip, right? Where as soon as you go into the slightly outer pairs, pound, Aussie, pound, yen, etc., all of a sudden your spreads are 1.3, 1.5, maybe even more, right? A 1 point spread on a Aussie CAD, especially how kind of not volatile that pair is, it's a big chunk of your trade. So actually, if you're someone like me where maybe my stop losses are about 10 pips or less, generally speaking, and similar to my kind of take profits, they're maybe about 10 to 15 pips. Actually, when you kind of add 1 pip here and there to each one, you're really changing up the risk reward. So a lot of my risk rewards have gone from 1.3, 1.4 as my target one to all of a sudden 1.12. And it's not necessarily because the concept or the strategy has changed, but where I'm actually able to get in on the trade because I have to front run orders, it's different. And there's going to be times, especially if you're on a sell, where you're kind of dealing with the bid price and the ask price. All of a sudden, it's a big difference where it might be a case with you just getting stopped out, where actually on the actual chart it doesn't show it. So you have to factor that in and have your stop that extra pip above, and that really compounds and really eats into you. So the lower the time frames you are on, a big advantage to swing trading is that we kind of reduce all of that and you can just have your natural edge. Look, here's my 1.5 to 1 risk reward. Right now it's only going down to about 1.48, but it's such a small minuscule statement rather than it going down to 1.2. So when you kind of tally that up over hundreds and hundreds of trades, it adds up a lot. Now more day trading means more trades during the week and whatnot during the day, right? Each fee might have commission fees, etc., etc. So all of these things actually really eat into your bank balance. So actually the requirement for you to be successful is higher, because now your profit factor, if you want to call it that, can't be a set amount. It has to be a lot higher because you've got extra hidden costs, that it's not just about the trades anymore, right? So these things are really important for you to know, and once you get into it, for you to judge what works for you. And ultimately those three things, and there's probably so many other factors to consider, but those three things for me are the kind of cornerstone of what you should consider, whether you want to be a swing trader or a day trader. But as I'm always going to say, it's down to what works for you. I know my personality, even though I still learn about it every day, and trading does that for you. It's a big journey of kind of self-discovery as well. But I know what I prefer. I know how I react in certain situations. And for a lot of us, it's easier said than done as well. It might just be a case, well, why don't you just do 20 pairs on swing trading? You'll get the same amount of action. I understand that, but it's not the same for my psychology. How slow it moves, that feedback, the speed of the feedback is very important to me. I don't like being in trades for ages. I don't like, as I'm waiting on a candle to pull back to my entry, it's not 2 or 3 minutes where I have to make the decision. It's 2 or 3 hours or 2 or 3 days. And now this gives me more sort of room for different sort of emotions that I don't really like having, more doubt, especially if it's taken you so long to kind of get to being consistently profitable. Every trade you almost kind of feel like, is this the best trade? You still have your rules and stuff like that, but especially if your trading is quite discretionary, as it comes back to your entry point or where it should be, you've got hours to overthink it. Yeah, it's a good setup, but this, that, but I don't know. And you can really convince yourself to either get in the setup or get out the setup, or there's so much room for that. Where, to me, once it's day trading, look, it's a 2 or 3 minute decision. You're on a timer. Make that decision now. And more often than not, I'm like, okay, it doesn't meet the rules. What do I rank this trade on? Higher time frame, middle time frame, lower time frame? That's just my process. Okay, cool. Is it good enough? Does it meet the criteria? Yes, no. If yes, just take it. Fuck it. And it's all done. But everything is speedy. It's quick. It's not impulsive, but it forces you to come to that conclusion rather than overthinking it and scaring yourself away. And oh no, but what about this big candle? It scares me. And actually, I don't know about this order block, but there's liquidity above and there's an imbalance there. And then it's just so much things you can say to yourself to, force yourself out of a setup. And I can still do it. I can still do it on the lower time frames, but to me personally, it's less likely. Like I said, I value the practice a lot. Time in the market, just like anything else, practice. A lot of it becomes a routine, and I don't really want to use the word intuition in the markets because typically you want to have some sort of structure on what you follow, but you get a gist of it where it's like, well, this break of structure isn't as good as that one, and I maybe not be able to point why specifically, rules based or objectively, why it's different and doesn't look as good. But you know what, I'm going to miss out on this setup, or this setup looks not as clean here, I want to get involved there, etc., etc. But all of these things you develop through practice, right? Your eyes get trained, you notice different patterns. That's all subconscious. Don't get me wrong, the edging fee is absolutely killing me right now, where I'm up about on paper, right, in terms of pure cash, up about £500 in the last month. Great. However, in reality, it's actually closer to about 350, I think. So I've spent 150 on commissions, just alone, commissions alone, let alone how much I've actually sacrificed on spreads and stuff like that, where my entries at one pip or two lower, etc., etc. So these are big things to consider, but it's down for you to decide. So I do hope it helps. As always, if I can speed up at least 1% of your journey, just help you just a little bit, then to me that's job done. But if you learned something new, if you got any feedback or suggestions or just ideas from yourself, comment down below, subscribe, and I'll see you next week.